quindi è un po' brutto parlare a delle telecamere spente, però fa parte del gioco. Saremo molto brevi, prometto, anche se ovviamente ci vogliono sempre i primi classici minuti di introduzione, ringraziamenti e presentazioni, però svelo subito il finale, che è l'obiettivo del webinar, che è quello di essere molto concreti, presentare quella che è una partnership strategica tra BPER Banca e ICICI Bank India, che è una delle principali banche indiane nel paese. L'obiettivo, dicevo, è essere concreti perché vogliamo dare spunti di riflessione e anche elementi di valutazione per le aziende che guardano con interesse al mercato indiano sia in import che in export. I colleghi di Cici ci daranno uno breve spaccato di quello che è l'economia indiana ad oggi, di quelli che sono i loro servizi, prodotti, come ci possono affiancare nell'interagire con il mercato indiano e daranno anche dei case study di come hanno aiutato alcune aziende italiane che sono presenti fisicamente in India, che magari possono servire da spunto per le future interazioni che vorrete avere col paese. Prima di procedere, giusto veramente 2 brevi parole su BPER Banca. Tutti quanti siete clienti, colleghi, clienti già di BPER, quindi conoscete benissimo lo standing di BPER, primario banca a livello nazionale, con una rete di sportelli molto variegata e radicata sul territorio, terzo gruppo bancario appunto in termini di presenza sul territorio italiano. Un focus molto importante su quella che è l'operatività estero delle aziende sia in ambito export che import. Il servizio Global Transaction Banking, di cui facciamo parte, è strutturato con una serie di uffici, tra cui quello che ho l'onore e il piacere di rappresentare, che è il correspondent banking, che si occupa delle relazioni con le banche internazionali, di cui oggi abbiamo un esempio con i colleghi di ICICI India. Accanto a noi lavorano e quindi siamo strutturati per poter accompagnare le aziende sia da un punto di vista di verifiche di export control che di operatività fisica su lettere di credito, garanzie, controdocumenti, pagamenti, operazioni più strutturate con uffici che seguono ad esempio il buyer's credit, credito fornitore, e poi diciamo quelli che la fanno da padroni sono i colleghi specialisti estero dislocati sul territorio, con cui sicuramente voi avete avuto modo di interagire sia per strutturare delle operazioni da un punto di vista più tecnico e spero, mi auguro, anche da un punto di vista consulenziale. Quello di oggi è un webinar che è stato possibile grazie ad un altro gruppo che fa parte sempre del Global Transaction, che sono i colleghi che si occupano appunto di strutturare webinar tematici di interesse per i clienti e di costruire anche una rete di relazioni a livello internazionale con consulenti che accompagnano le aziende verso quella che è il processo di internazionalizzazione. Quindi senza diciamo dilungarmi troppo, perché non è questo l'oggetto del webinar, lascerei la parola. Siamo veramente molto felici e onorati di avere qui anche il dottor Paolo Zampella, viceconsole italiano a Mumbai, e direi che sia un grande segno di coerenza e di interesse anche da parte delle istituzioni in quello che rappresenta davvero il mercato indiano per le imprese italiane oggi. Quindi abbiamo un viceconsole in attesa, abbiamo una primaria banca in attesa. Il mio migliore intervento è smettere di parlare, augurarvi buon viaggio verso questa scoperta di nuove opportunità e grazie ancora.
Grazie mille, buongiorno all'Italia, buon pomeriggio all'India. So good afternoon for those in India and good morning in Italy. First of all, I'm honored, so I have to be thankful for giving the Consulate General of Italy, Mumbai, this opportunity to introduce this webinar, and specifically to myself. And I will be very brief as well. And I will start with a double disclaimer. First of all, the Consul General, Walter Ferrara, was supposed to be here, but unfortunately, he had another commitment in another state of our jurisdiction. So I apologize for being present myself. And the second disclaimer is that the knowledge of this country and of the Indian markets that I have is very limited. So my contribution to this webinar will be very limited because my experience here is only a few weeks long, and I'm sure you and the Italian companies that are already present here in India know much more. So I should be the one here on a listening mode, learning from you instead of teaching. But unfortunately, I also have another commitment. That's why I will have to leave at one point, few minutes after my brief introduction. So from our perspective as an institution of the Italian government, what I can give is an overview of the current status of the Indian-Italian bilateral relations. We can say we are living a momentum at this time. You all know the very good relations between the government of Italy and the government of India, especially given the feeling between our two prime ministers, Prime Minister Giorgia Meloni and Prime Minister Narendra Modi. They, as you all know, they adopted last year in November 24, on the occasion of the G20 summit, they adopted a strategic action plan, so the India-Italy joint strategic action plan, which is aimed at providing a framework of for the next 5 years. So from 2025 up to 2029, they identified 10 sectors of intervention, from space, science, energy, defense, political dialogue, to create mechanism of regular consultation, and especially of your interest is, of course, section number 2, economic cooperation and investments, where in 3 paragraphs, some sectors, some markets have been identified to be promoted, and then promotion of business fora, promotion of industrial partnership. So as Italian government and the Indian government as well, we welcome the kinds of partnership that the two financial institutions that are organizing today, the BPER and ICICI, are showing, are proving on a daily basis. So positive examples of cooperations, but not only from the strictly bilateral perspective of Italian-Indian relations, also, as you all know, on the EU side, negotiations regarding a free trade agreement between the EU and India are ongoing. According to some, they are expecting to sign and conclude a free trade agreement and also investment protection agreement and geographical indications agreement by the end of this year. This would foster, of course, trade, and it will be the international agreement concerning and covering the greatest volume of trade in the world. So as you can see, the political momentum can be seized also from the perspective of private companies. And if you want to narrow briefly the scope of our overview to the jurisdiction we cover from the Italian Consulate General in Mumbai, we specifically have jurisdiction over 6 Indian states, and of course, among them, Maharashtra, which is the state where we are located. Maharashtra is has 120 million people, so double the Italian population. It's the first Indian state for foreign direct investments. It's the most industrialized Indian state. It has a well-developed social, physical, and industrial infrastructure. And when it comes to the bilateral relations between Maharashtra and Italy, Maharashtra bears a particular importance for the Italian companies because it has the greatest number of Italian companies here in India, accounting for the 33% of Italian investments. So 1/3 of the Italian presence in all India is in Maharashtra, and 7% of the imports of Maharashtra comes from Italy. So making Italy the top 7 of the countries of origin of Maharashtra's import. And needless to say, the importance of Mumbai as a city, as a financial the financial capital of India, and in total, Maharashtra accounts for the 14% around of the GDP of India. Generally speaking, as I said, the political relations between Italy and India and EU and India are living a very positive moment, and conditions are the environment nowadays seems more and more conducive for creating new partnerships and for investing and attracting the Italian presence here. So we can say that Maharashtra is the perfect place where the matching between the two concepts of made in Italy and make in India can find its the best example. Nothing else to say apart from wishing you good luck in your the continuation of this webinar and also of your work in Italy and here in India. Thank you very much again for having me. We support your job, your work, and as you can always count on the Italian Consulate General here in Mumbai. And I will now leave the floor to the other speakers and continue happily to listen to what you have to share with us. And then, unfortunately, we need to leave. Thank you very much. Grazie.
Thank you, Mr. Zampella. It was our pleasure having you here. I think also very much appreciated from the colleagues of ICICI India. And we will for sure come to you, and also the companies that are attending the webinar will for sure come to you if they have any issue and opportunity to take advantage in India. So thank you for being here again, and hope to meet you next time in person. Now, without further ado, the floor is definitely yours, colleagues of ICICI India, which we really thank for this opportunity of sharing information and experience. So thank you again, and the floor is yours.
Thank you, Vanessa, for the introduction. We'd also like to thank you and Gabriella for your assistance in organizing today's event. Our special thanks to you, Mr. Paolo Zampella, for the keynote address. Once again, a warm welcome to you all in Italy and in India. I'm Sharon Nerona from ICICI Bank, your moderator for today's webinar. On behalf of ICICI Bank, it is our immense pleasure and privilege to host this webinar along with one of our key partners in Italy, BPER Banca. We are grateful to have an exceptional panel of attendees and speakers from ICICI Bank who will share their expertise and insights with us. We have with us today Mr. Anupam Verma, Head International Financial Institutions Group, Syndications, and Board Member of ICICI Bank UK PLC and ICICI Bank Canada. Mr. Samir Narang, Head of Economic Research. Mr. Santosh Pai, Head of Multinational Clients Group. Mr. Amit Goyal, Head of Structured Trade and Supply Chain Finance. We're also thankful to our business heads of the Multinational Clients Group, Mr. Manmohan Dwarkani and Mr. Anand Shah, for joining us today. We move on to our first speaker. It is a privilege to introduce Mr. Anupam Verma, who heads the International Financial Institutions Group. He holds over 25 years of experience, and his role entails leveraging global FI relationships to drive MNC corporate referrals, investment flows into India, as well as retail cross-sell engagements for their business in India. I request Anupam to now address us.
Thank you, Sharon. It's a pleasure to welcome all of you on behalf of ICICI Bank today in today's webinar. Deputy Consul General Mrs. Zampala has made my job much easier by talking about how strong India-Italy corridor is and how the opportunity is only growing from here. In fact, we see in Europe, India, Italy, it's a fourth largest trade corridor, about $15 billion of trade. We already have about 700 Italian companies in India. And the way we are seeing, and my colleagues will cover all of that in more detail, the way we are seeing interest in India across manufacturing, across services, across capital markets in terms of institutional flows. Clearly, there are a lot of areas where we could collaborate. Again, I would like to thank our partner, BPER Banca, to giving us this opportunity to talk about India and how ICICI Bank can serve your customers as they look at entering India for expanding their business. So with this background, I'll hand it over to Sharon and not taking much time because we have a lot of interesting stuff to talk about. Thank you.
Thank you, Anupam, for setting the tone for today's webinar. Our next speaker is Mr. Samir Narang, Head of Economic Research. Samir has over 20 years of experience in macroeconomics and investment research, spanning both the public and private sectors. I request Samir to share his insights on the Indian economy.
Thank you, Sharon, and thank you all for coming in today. Hopefully, I'm audible and visible as well. I have logged in from another device. There was an issue with the other device. So, a very warm welcome to all the participants and particularly to Mr. Zampala for setting up the context. So what we have done today is that we've got a few slides to just set the context as to what is happening in India and how strong is the trade relationship between India, Europe, and India and Italy, and where are the opportunities as we speak. So the first slide, if you can move, please. So the first thing is that globally, what we are seeing is there is a large impact of the current tariff issues that are happening led by the US. The US itself is likely to see a drop in its growth and as well as higher inflation. But the impact on India, as you can see on the table towards your right, is limited because India's exports to US as a percentage of its domestic product or overall size of the economy is around 2.4% or around 2%. So our reliance on US as an export market is limited. So the impact is also limited. The second thing is that India as such is only witnessing 10% tariff like others. And in the month of April, for which most recent data is available, India's exports to the US actually rose by 27%, 27%. 27% compared to overall imports of the US increasing by less than 2%. So India's exports of Apple iPhones and other products have actually seen a sharp increase in the month of April. It's also that a large part of it is front loading, and at the end of the year, you will see a little bit of deceleration as demand in the US comes down. But substitution of supply chains away from China is likely to benefit a non-China led supply chains such as India. And it is possible that we will see very limited impact of shrinkage of aggregate demand, at least in the US. In case of Europe, we also have a very large trade relationship. And if demand in Europe comes down, I think then the exports out of India will also have an impact. But as of now, we see very limited impact if the trade issues are more or less sorted out. Whether they are sorted out or not is a big question. And we don't know. We don't have many answers on that. And I think neither do so many people. But what we do assess is that impact on India is relatively limited. Next slide. And this is the total share of India's exports as a percentage of GDP and to the US, including services. The first slide was only on goods. India is also a very large exporter of services, particularly commercial services or IT services. And what we see is that the share of US exports in services is more than the exports to goods as a percentage of GDP. And if US services sectors will also get impacted, but till such time that the impact is limited, India is also largely insulated. As you can see, the exports to US as a percentage of GDP, services exports are more than goods exports. So given that India is a very large services-led economy and services exports economy as well, we see limited impact on India from the reciprocal tariffs as of now. Till such time the tariffs don't hit services trade to that extent, we see limited impact on the country. In fact, we see more opportunities in case of services exports because of limited, pressure that you will see, particularly in the US on corporates to cut costs and then to move offshore. In that case, at least for services, you'll have a large demand uptick in the country. Next slide, please. The other element is that India remains very domestically led economy. As you can see, agriculture, which is around 15% of India's economy, is actually growing at more than 4% last year. And even this year, the prediction is that the monsoon or the rainfall, which is concentrated in India between June and September, is likely to be normal to above normal. So in the case of good rainfall, you expect the farm economy to do well. And that should support growth because around about 65% of Indians still stay in rural India or in villages, which is intrinsically linked to agriculture apart from other services. The second part is that within India, there is an underlying increase in demand for services led by travel. The domestic travel industry is booming. We've more than doubled the number of airports that we had 10 years back now to today. And we've seen at least a 50% increase in the national highway network over the last 10 years. So there is a large amount of domestic travel that is happening both by roads and by railways. Just to give you a context, India's domestic toll collections, the amount that we raise from tolling on highways is increasing by around 16 to 20% on a YOY basis. So that tells you that the underlying commercial activity in the country is actually fairly robust. The consumption tax or the GST, which is there in India, which had slowed down, is also increasing by around 14 to 16%. So that tells you that the domestic economy should be able to buffer some of the or insulate itself to some extent from the external headwinds. It's a very unique opportunity. The other element is the India's inclusion in other value chains, which we'll cover later in the presentation. That is also an opportunity both for exports as well as imports, because we'll also be importing a large amount of products as we assemble them, be it for electronics or garments or footwear. Next slide, please. And what do we estimate? We estimate that growth in this financial year should also stabilize around last year's number of 6.5%. Now, if you see the table on the right side, you'll see that growth in the years prior to that was 7.6 and 9.2. And after that, in 25 and 26, growth is actually coming down to 6.5 and 6.4. So what we are seeing is a slowdown in India as well compared to our historical standards of growing at around 8% in the years prior to that. And that's largely because of what we have seen in terms of policy response. We've seen in case of India that the fiscal deficit, which was elevated, has come down. This year, it will be around 4.4% of GDP. And during the peak of the pandemic, it was more than 9%. So we have reduced our fiscal deficit by almost half over a period of 5 years. And that naturally impacts demand at some point in time. The other part is that interest rates in India also had gone up, which was the case for most central banks, including ECB and the Federal Reserve. But ECB started its cutting cycle sometime last year, and we started our interest rate easing cycle in February. We've already done 100 basis points. ECB has done 200 basis points. So that should also spur demand and domestic consumption. So overall, put together a good monsoon, policy support by the government. At the same time, lower oil prices internationally. India is a large net importer of oil. All of that bodes very well for growth outlook over the next couple of quarters and years. Notably, last quarter growth was in excess of 7%, but still we are estimating that it had some one-offs. So we should see growth around 6.5% even this year, and then it goes up because of the policy response. Next slide, please. Now moving to India-Italy trade. Next slide. So what we see is that India's trade with Europe is growing around 10%, and India's trade with Italy is growing around 8 to 9%. So these are not bad numbers, but it could be much bigger, much better over a period of time as we integrate with the global value chains and more with the different segments and industries across Italy and across Europe. So between 20 and 25, there has been a bump up in trade over the last 5 years, but we believe it could be much better going forward if we are able to integrate ourselves into the domestic value chains, and if Italy is also able to, bring itself into these domestic value chains and outsource some of the work or offshore some of the work that is happening in other parts of the world into these supply chains. Next slide, please. And as you can see, when you break this up into different product segments of India's exports to Italy and India's imports from Italy, what we see is that overall market share will be around 1.4 to 1% for exports and imports that India has in Italy's market and Italy has in India's market. But there are certain product segments where numbers are much better. For instance, India's exports of base metals, leather products, textiles, and capital equipment is much higher than the average of 1.4%. That is the market share that India enjoys in Italy's imports. And in case of Italy's market share in India's imports, which is around 1%, for certain capital goods, for certain paper and wood products and chemicals, it's slightly on the higher side. and for textiles, for agri products, it's on the lower side. So we do see there is a lot of synergies which can be, harnessed over here. And there is a scope for improvement in the market share, which itself is fairly low at around 1% on either side. Ideally, this number should be around at least the US benchmark number for goods is in northwards of 2%, and in case of services with the US, that number is closer to 3%. So 2 to 3% is the ideal range. At least this number should be, if not more, to begin with. So there is a lot of opportunity that perhaps exists as we speak. This number in terms of trade could be as high as 5% compared to a number which is below 2% right now. So there's a large opportunity in certain key segments, particularly for certain electronics, which India is trying to export, and a lot of products, particularly, a lot of textiles, a lot of leather products that Italy can export into India. Next slide, please. This is the overall picture of investments. Cumulative FDI inflows from into India. Share of Italy is, I think, around 19th number. So here also we feel there could be a large improvement. As of now, the cumulative FDI inflows show there is a large scope for improvement. Key firms we have listed, which are present in India, or Indian firms which are present in Italy, be it for IT services, manufacturing, or engineering. But what we do see is that most of the inward inflows from Italy is largely concentrated around manufacturing, automotive, and banking. This can obviously expand over a period of time, and tourism could be one of the sectors where we can see two-way movement, particularly Indians traveling into Europe or Italy, and Italians traveling into India. That is obviously a big opportunity which is possible. As of now, cumulative inflows are around 3.6 billion, which also is fairly on the lower side compared to the opportunity that can be. Next slide. Next slide, please. So in this section, we've covered what are the structural drivers of growth in India, and why India is an attractive market. So the first thing is infrastructure. India's case, infrastructure has been a big problem over the last 30, 40 years. But what we are seeing is a massive reboot of infrastructure that is happening today. And this should lead to a fairly steady growth going into the next decade as well. So we have seen in India's case, anywhere doubling or a 50% increase in most infrastructure, availability in the country, and that should improve India's manufacturing competitiveness and make it a cheaper place to do business in the long run. And we're already seeing the impact of that in terms of a much higher potential growth rate than we have seen in the period prior to that, and much lower inflation as well. So we see highways, ports, airports, renewables, and railways continuing to be important, metric for the government to improve infrastructure availability, and a great opportunity over the next coming decade. Next slide, please. The renewable space is one more where we have seen a steady increase in capacity. Last year, India added around 30 gigawatts of renewable capacity led by solar. And that is, again, a big opportunity in terms of going forward, because that is likely to go up to 50 gigawatts. So approximately 30 gigawatts is equal to around about $25 billion of investment, or around 22, 23 billion euros of investment that has happened last year. And going forward, this number should go up by 30 to 40%, is what the government is targeting to achieve its, achieve the targets that have been laid out for carbon emission in the country. And at the same time, there's large scope for further improvement in efficiency, because AT&C losses in the Indian The distribution companies are still on the higher side. So as they come down, and some of them are getting privatized as well, because most of them are owned by the government as of now, the opportunity in the power sector led by solar is immense and huge. And India is also penetrating the supply chain by incrementally increasing the production of solar modules as well as solar cells. Next slide. The other thing which I think all of us have known over the last few years is the digital penetration in the country. This continues to go up, led by availability of data penetration and the need to engage more on the digital platforms. And the government has been a key player in this segment, and they've introduced a number of government services, not only Aadhaar linked, but the FASTag, which is the tolling, which I was speaking about. Over the course of a decade, the amount collected in the tolls in India has gone up by 10 times, from a very small amount to a very large amount now. So approximately now, on an annualized basis, $6 to $7 billion of toll is being collected from Indian highways, and this number is increasing around 15 to 20%. Also, because of the efficiency gains driving it largely. The other elements of this strategy is obviously the payments platform, which is increasing in the case of the country. Around about 67 to 70% of the local payment network, which is called the Unified Payment Interface, is around 70% of GDP now in terms of payments. This number was less than 1% of GDP 5 to 6 years back. So it's gone up by approximately 70 to 80 times over the course of the last 5 years. And that tells you how much digital benefit the country has got in terms of productivity, in terms of saving time and costs. A lot of government transfers now happen on this platform. I think that number would be as high as $100 billion right now, which would be transferred via government, government transfers to consumers, which are being done directly because of the digital transfers being available. Earlier, most of these things or transfers had to happen in kind, but now cash transfers is the way forward directly into accounts of the beneficiaries. And that has been a big transformation in this country in the banking landscape. Next slide. The most important thing is that India's corporate sector is actually fairly deleveraged, and profitability is on the higher side over the last decade of the cycle that we have seen. So despite, as we saw, growth coming down to around 6.5%, profitability has not suffered to that extent. Profitability remains fairly good. That's a very good indicator of how demand is likely to pan out and how the cycle will behave, because underlying strength in corporate balance sheets implies a reasonably good period of growth ahead. And the second part is that unlike most parts of the world, Indian corporates are completely under-leveraged. So as you can see, the leverage, which was in excess of 65% in 2021, is down by more than 12 to 13 percentage points as of now. So you have a long leg room available for growth, conditioned on demand being there, where the corporates can actually use leverage to increase their balance sheet or assets to invest, and profitability is good to sustain it. So it's a very, very good virtuous cycle. Next slide, please. The other part, as I spoke about, was the good amount of services that India exports. And we are seeing fairly large traction in terms of demand for commercial offices in the country for these global capability centers. And approximately 45% of all commercial real estate, which is of tier one quality, is being used by these global capability centers today. So it's a very large opportunity. It's a very large market. We are the playground for most of the GCCs globally, and we don't see this coming down. So the demand for IT services has come down after the advent of artificial intelligence or artificial generative intelligence, which is coming up. And taking away some of the work away from IT services. But this is a very big structural positive in case of the demand coming to India from global capability centers, where they're offshoring their work out of other parts of the world into the country. And this is not limited to low-end jobs, be it coding, be it research, design, R&D. All of that work is moving into the country because India has a very large population of STEM graduates who can do that work. So overall, this is a very big structural trend which should continue over the next few years. And any company, even in Italy, should look at opening up a GCC if they've not opened up to take benefit of this opportunity. Next slide, please. The other part is that given this backdrop of what is happening in the country, we have seen that India's external sector has become very resilient and very strong. The rupee is far more well behaved now than it has been ever in the previous cycles. Inflation finally has come down under RBI's target and has opened up room for policy easing and has not led to any large depreciation pressure on the currency because of the fundamentals of the external sector being very good, be it low current account deficit, be it elevated FX reserves, remittances going up, or money that Indians send from abroad into India going up, and software exports led by global capability centers rising. So all of that put together has created a fairly good framework for the India's external sector, including the INR. Next slide, please. And the biggest change that we are seeing in India's industrial sector from an exports perspective is largely driven by electronics, capital goods as well, and chemicals. So these three sectors, as you can see, electronics exports 10 years ago were $7 billion. Today, we are doing $40 billion, in excess of $40 billion. So that's up approximately 6 times in 10 years. So that tells you the speed at which India's electronic exports are growing. Capital goods and engineering goods also, they're up by $40 billion over a course of a 10-year period. Not as much as electronics because it was on a low base, but this segment also should do fairly well as more and more firms are taking benefit of India's manufacturing or industrial base. And the third one is chemicals and drugs and pharma is also included in chemicals, where you are seeing a $30 billion uplift over a decade. So notably, these three segments are what is driving India's industrial sector as of now, apart from services. And on the import front also, both for domestic demand and for value addition that India is doing in terms of assembly line manufacturing for electronics, there is a very large increase in imports of even capital goods or engineering goods for domestic capex, as well as electronics for re-exports and domestic market. And the same is case with the chemical demand, where we are importing chemicals for manufacturing drugs or for other purposes, which is for domestic demand. Next slide, please. So our view is that India is likely to be a 7 trillion economy, around about 7 trillion economy by 2030-31. This year, we believe we will hit around about $4 trillion plus. Growth is driven essentially both by consumption and investment. Government is investing more or less at around 3% of GDP, which is the central government led by Prime Minister Narendra Modi. And in the states also, a lot of governments are investing for building schools, for building irrigation, for building roads that connects people together, for building power distribution, networks. All of that put together is ensuring that domestic investment is doing well. Consumption has been weak of late because of lower job creation, particularly in IT services. But most of the other parts of the economy are okay. Investments have not picked up to that extent, particularly by private sector, despite government spending, because of excess capacity of China impacting the investment outlook across the world, including India. But we believe, given that there are too many positives led by monetary stimulus being given by the central bank, government spending continuing for infrastructure and for key sectors like the production-linked incentive scheme, which should continue, along with the fact that India's exports should ideally also pick up as it integrates in global value chain. So all of that put together makes us believe that both consumption as job market picks up in terms of hiring, as well as investment should be able to sustain growth over the next couple of years. So we believe we should hit around 5 trillion in FY26, 7 just short of that, and then move closer to 7 trillion FY31. But as you can see, over the course of 27 to 31, which is around about a 4 to 5 year period, we are seeing incrementally $2 trillion of demand being created in the country, and to be services both by domestic manufacturers and by imports. So that's a fairly large market which is being created over the next course of few years, and hopefully we should sustain this momentum well into the future, given the structural factors. Yeah, thank you so much.
Thank you, Samir, for the very insightful presentation on India's growing economy. Our next speaker is Mr. Santosh Pai, Head of Multinational Clients Group and a seasoned banker with over 28 years of working experience. He was instrumental in establishing the multinational clients business in ICICI Bank. I invite Santosh to speak about ICICI Bank, its offerings in the MNC business space.
Thank you, Sharon. Thank you to members of the BPER Bank. I hope I am audible and visible. If you can please confirm.
Yes,
Yes,
perfectly.
Santosh, we can hear you and see you.
Yeah, maybe we can just go through the slides, please. Maybe I'll just take the next 5-7 minutes to very quickly talk about our bank, ICICI Bank. I also heard you pronouncing our bank in Italian called ICICI Bank. Okay, it was very nice to hear that. So we are the 18th largest bank in the world now with the USD market cap of nearly $120 billion. We have a large consolidated balance sheet size of over 300 billion as of March 31st. We are also declared as a systemically important bank for India with a net worth of nearly 35 billion. We are one of the few Indian private sector banks having presence in nearly 15 countries outside India with a correspondent banking network of 300 plus banks. So Italy gets covered in Europe through our Germany office. In fact, I'm joined by one of my German colleagues from my ICICI Germany bank who will speak after me. In India, we have a wide coverage of branches of nearly 7,000 branches, nearly 16,500 ATMs. We are an investment grade AAA by Moody and S&P for India, and a very strong capital adequacy of over 16%, whereas the stipulated adequacy level is more than 11.5%, and we are adequately capitalized at 16%. Next. We are a brand which is a comprehensive, universal financial services brand, not just as ICICI Bank, but also as ICICI Prudential, which is into life insurance, ICICI Securities, which is the #1 investment bank in India. We have ICICI Prudential, which is an asset management company, ICICI Lombard, which is a tie-up with Lombard of Canada for general insurance, ICICI Venture, which is one of the most leading and one of the most early setup for funding startups, and ICICI Home Finance for home loans. So this is how we are placed here in India. So if a corporate reaches out to ICICI Bank or the ICICI brand, we have every single product required both for individual as well as a corporate to take care of all his banking requirements under one single brand. Next. I just mentioned to you, we are present in more than a dozen countries outside India. We were one of the first banks to go international way back in the year 2002, and also to list on the New York Stock Exchange. And if you look here from the east, we are covered from Hong Kong, which Hong Kong is our office, which covers Japan, Korea, Taiwan, that is basically North Asia, and also Hong Kong and China. South Asia is covered through Singapore, which covers Singapore, Malaysia, Indonesia. India, as I just mentioned to you, we have our branches. Middle East is covered through UAE and Dubai. Is covered through Dubai and Bahrain. We have a branch in Frankfurt, which covers the whole of mainland Europe. And as I said, my colleagues from Germany, they keep traveling to France, they keep traveling to Italy and all the European countries to meet respective clients from those countries. UK, we have a very strong setup. It's a full service subsidiary of ICICI India, which has presence both in corporate, trade, forex, and also on retail business. US is covered through New York from the East Coast. We also have now a branch in Midwest, that's in Dallas, in the Midwest. We also have a branch in the West Coast in California, and we have a very strong presence in Canada. So any client having presence in these countries can also connect with ICICI Bank, and we would have very seamless connections with these global entities, and that's how we serve our customers, not just in India, but also in their base branches, in their base locations, in their regional offices, and also their head offices. Next. We have a very strong multinational client presence in India, and a desk which is consisting of more than 500 people, which cover nearly 8,000 multinational companies here. And a lot of these corporates, we have nearly 15,000 MNC companies in India, out of which, as I just mentioned, 8,000 bank with ICICI. So there is a very specific and a special reason for this, because we have understood this business over the last a decade or so. We have a global coverage relationship team, which specifically dedicated for handling multinational clients, both in India and overseas. We give one-stop solutions to our corporates across the ICICI group. We have a very strong team for regulatory expertise. We have digitized solutions and platforms. Every product of ours has a digital outreach. We have, very importantly, when say for example, if an Italian company comes to India and they need credit limits for a quick setup for working capital or term loans, ICICI has got those pre-approved credit lines based on global and local parameters. And we can give them quick access to money, quick access to capital, quick access to all banking services from the day they are incorporated in India. We have simplified our documentation over a long period of time. We have made it very simple, and we have kept it as per international standards. You just heard my colleague Sami speak today on economy. So we have a very strong market, economic, and FX research team, which gives both local and global insights to all our 8,000 companies. Next. So we are, partners to corporates, as I said, not just from the corporate banking perspective, but also from all the other products. So these are just some products which I wanted to list down for you. They are simple, funded, non-funded trade products, export, import, daily transaction, collections, payments. We support clients on their entire treasury management, because we have one of the largest treasuries in India, and very connected to all the global treasury centers of ICICI Bank, which are present globally as well. Term loans and working capital finance. This is our long-term, short-term financing, both in rupee and foreign currency, which is our basic product. We also support customers at their plant location. So if there is a large manufacturing company setting up their facilities in India, we have our plant, we have our branch and ATM support at their location. Just to give you an example, Toyota is one of our very large relationships. So at their office and at their branch in Bangalore, we have a very large branch set up in their location for them, for the corporate as well as for their employee requirements, and syndication and other debt market service products. So this is a standard set of products that we offer to our customers. Next. I just mentioned about the credit support to customers. So we have a very quick turnaround product which helps global companies to get quick access to credit lines in India. We have fund-based, non-fund-based, and this program caters to subsidiaries from 30 plus countries. In fact, we have more than 500 companies on this platform, and this is offering the complete ecosystem products to them so that we handhold them and give them all the required banking products for them to smoothly start their operations in India. Next. I think the gentleman earlier also covered the India-Italy corridor. I don't want to get into the economics part of it, but I can tell you for sure we have nearly 700 Italian companies established in India. Many of them are in Maharashtra, as the earlier speaker mentioned. They are in a city called Pune. And ICICI has a very strong relationship, a very strong setup of relationship and product managers sitting out of each of these locations, and actively supporting Italian companies in India. So you can see those logos of Piaggio, Danieli, Carraro, Lavazza, Fiat, which are very large Italian setups in India, and we are bankers to all of them. So nearly 150 Italian companies, subsidiaries in India bank with ICICI Bank. And we have also connected with the Italian decision makers sitting out of Florence, sitting out of Milan, sitting out of other cities across Italy through our presence in Germany. Next. So I just thought I'll give you, a very quick glance of how we support different genres of corporates. A corporate could be newly incorporated corporate in country. It could be an existing business in India, and it could be a long-standing company which requires growth. So if you look at Danieli Combustion, which was a newly incorporated entity in India, we met them at the global headquarters in Italy before they came to India. We supported their operations here through current account, FDI settlement, and employee relationships. Today, in year 3, we are the private bankers for the CXOs. We have corporate credit card and financial planning workshops done for Danieli. If you look at Piaggio, which is a very large two-wheeler auto company, we have multiple engagements. In the first year, we had multiple engagements with them for dealer financing program, so that we support their sales here in India. We onboarded them all the entire dealer network in year 2, and in year 3, we are one of their strong banking partners taking care of the asset and liability business. If you look at Machismo, we onboarded them on our credit program. We gave them a current account, EEFCs, and tax payment initiations. Global clients team from Italy engaged with the client's Italian team engaged with our chief economist, and we have group exposures with them as well. And we have onboarded senior management for private banking and insurance, and the bank of insurance for a planned IPO as well. So we are bankers of issuance for their upcoming IPO as well. So this is how, over a period of 1 year, 2 year, 3 year, we have been hand-holding and working very closely with various Italian companies in India. Next. So I think this is a very quick snapshot of the relationships that we can have, or rather the partnership opportunities that we can have with our customers. So any corporate which comes into India as a client will have all the requirements of fund-based, non-fund-based, trade finance, treasury, corporate card, insurance, investment. The customers of the client will also need banking facilities like your multi-travel, strategic partnerships, and third-party offers. The clients, suppliers in India, right? The supply chain partners would also need, your supply chain solutions, which we offer. And the employees of the customers also need support from their retail banking perspective. So right from digital wallets to insurance to personalized third party and demat accounts. So every single financial product that a corporate could think about in India once they come in, we have a complete stack for them to support them on their banking requirements. So this is what we call as a complete ecosystem hand-holding product and a stack which ICICI Bank's one single team takes care of your requirements end to end. Right. Next. These are a few of our personal banking solutions for our customers. As I said, they could be retail customers who would need wealth creation, risk coverage, savings, retirement planning, asset creations. I'm not getting into the details, but this is a slide which will completely take care of a retail client's requirement across his investment career. It could be a new journey into a corporate, it could be a middle level management, or it could be a senior level personnel in a company. So every stage of his planning, every stage of his investment planning is taken care of at ICICI. So right from the corporate to its clients, to its customers, to its vendors, to its dealers, and also its employees is something that ICICI comes across as a complete global ecosystem banker. As I said, not just in India, but also in those 15 locations that we are present. So whenever we interact with the 150, 200 Italian companies, we reach out to their global head offices in Italy, and my colleagues in those locations from Germany reach out to them, and we jointly discuss opportunities. ICICI Bank is also a strong partner to the Indo-Italian Chamber of Commerce, and we have done good amount of joint meetings with them, and that's how we attracted a great set of Italian companies. We travel, Anupam travels, the team travels to Italy, and we meet the corporates there as well, just to see, it's a more of a face-to-face reach out to the customer to see how we can work not just in India, but also in those 15 locations that we are present. Right. So this is a broad set of our offerings. So maybe I thought as a relationship person, I should also try and make efforts to speak at least one line in Italian, because we are all relationship people. We meet customers, we onboard business. So I have just made a one line. So pardon me if I make some mistakes. So it is: vi ringraziamo sentinamente I siamo liti di poter diventare ai vostri partner bancaria in India. Grazie. So
thank you for trying.
I know there are a lot of mistakes in pronunciation, but I think the intent was to say that we are very thankful and grateful to you for banking, for being with us, and also we look forward to be your banking partners to you both in India and globally. Thank you, ma'am. I'm just joined by my colleague from Germany, Mr. Srikant. So he'll just take the next couple of minutes to talk about our engagements in Germany and how we cover Italy from that location. Over to you, Srikant.
Yeah, thank you. Hope my voice is audible.
Yes, you're audible and visible.
Yeah.
Yes,
Yeah.
it is.
Yeah, thank you so much. In fact, we started in 2008 as a passported branch of ICICI Bank UK PLC. Post Brexit, we took Section 53 license from the local, authorities. Now we participate in local clearing through SEPA payments and target to clearing. Towards corporate banking, we participate through RCF and Sulchains, purely catering to India-linked businesses, and trade finance for current account transactions as well as capital account transactions and services. Thank you.
Thank you, Santosh and Srikanta, for giving us an overview of the bank, its vast reach, and its relevant product offerings. Yes, Anisa, as Amit said, in the interest of time, we'd be happy if you could collate any questions that the participants may have, and we can arrange to respond to them appropriately. I wish to thank all of you for your presence and participation. A special thank you to all our speakers for the day. We wish you a great day today.
Thank you very much for joining us today. I don't know if we want to take the chance to have some questions from the audience. Please feel free to write a question. Otherwise, I would like to ask just one question that would be maybe of interest for all in general. Since the India market building relationship with the Indian market requires a lot of time and effort. Do you have any suggestion for the companies that would like to enter into business with Indian companies without underestimating the importance of trust and continuity in partnership?
So maybe I'll try and give my take, and then Santosh can add in. As a bank, we have clients across multiple sectors: manufacturing, services, capital markets. If there are funds who are investing in India, so if any of your client wants to have a more detailed understanding of one specific sector which they are interested in, or if they want more insights about certain clients in India who they are exporting to or importing from, we'll be very happy to provide that market insight. Apart from the macroeconomic update, which was covered by Sameer, we can also provide more detailed deep dive. And if they want to, let's say, any of your client wants to have a informal discussion with a potential partner in India, potential companies who could be their supply chain, vendors, suppliers, customers, and so on and so forth. A lot of that work will be able to do because we have a presence across the entire spectrum of large corporates, mid-market, SME. We also have an investment bank which can help them. So we have, we can handhold. But India, we have seen a lot of multinational companies, across different sectors in different countries, starting from Suzuki's and Unilever's starting in 1980s and 90s. I think clearly it's a market which requires long-term, thinking, where you need to come, invest, understand the local market. While we also have a lot of expats being sent by different companies, but it's also Indian market also has a lot of good local talent. So it's a mix of how do you create a combination of global best practices and understanding of local markets.
Okay. So thank you very much again. We ran out of time. It's a pity, but we thanks also all the participants that took part of this webinar today. And again, if there is any question from the companies, we will be more than happy to collect all the questions and give them a feedback as well as soon as possible.
And I also would like to thank the entire team of BPER Banca, which has worked on this. We really value the relationship that we have with your good bank, and we will be very happy to continue to work with your client to support them in India. We value relationships and partnerships, and I think between the two good banks, we can support your clients as they look at understanding India better.
Thank you. Likewise. So have a nice evening in Mumbai and hope to have the possibility to meet again. Why not with another interesting webinar?